Good afternoon, it's Mike here again from the Code to Trade, and thank you for joining me on this second chapter. The second chapter is in relation to the ugly side of trading, because there's a high level of risk in trading. Too many people see these videos on websites or while on Facebook, these videos on making profit overnight. You can become quite wealthy very quickly by trading. In reality, it's not the case. People test it with small amount of savings and they lose them all. So yes, it's only maybe a small amount of savings, but for these people who put the videos up, who put these trading accounts on the web or for mobile apps, you can imagine if everyone's losing just a tiny amount of savings, they're making a lot of profit. And most people put it down to experience and they just don't want to try again. But there's a number of people that they actually kind of like it and they want to learn. And I explained about a person yesterday who had approached me and they had actually lost some savings. They had lost $450 that was in their trading account. So they weren't happy about it, but they weren't giving up. They approached me in relation to learning the code to trade, so they could learn to trade without losing their savings. So sitting and talking to this person, what they explained to me is they were trading gold and they opened a short position. For anyone watching for the first time and does not understand a short position, it just means they were selling gold. And they placed this selling of gold on the 23rd of December 2019. Now the position they placed, if gold was to fall in value, they were only going to be earning 42 cents per pip. And yet again, anyone who doesn't understand what a pip is, it's just a movement in gold, a movement in price of gold. So it's not a high value they are earning if gold went down in value. Now, in this instance, gold actually increased in value. So instead of earning 42 cents per pip, they were losing 42 cents per pip. And when you look at 42 cents, for them to lose $450, gold must have increased significantly. So what happened? The next screen I'm going to show you is the chart, and I'll go into that in a little bit more detail. For those of you who are watching my videos for the very first time and who got no experience in trading, this is a Japanese candlestick chart. And this particular chart is an hourly chart. You can see on the left. And each candle represents 1 hour. So what you can see on the right here, I have 2 arrows pointing down. So the person I spoke to yesterday, they knew that gold was kind of going on an increase in price. And what they were explaining was they felt as though gold was going to start coming back down again. So they placed a position on this candle here. Now, just to quickly explain for those who don't understand what a Chinese candlestick chart is, the blue just represents a bull run. It means the bulls who are buying, prices going up. The red represents the bears. The bears are selling, prices going down. And this candle here, this candle would have been a full blue candle, and then the bears took over and rejected the price of gold going up, which leaves a shadow. So that's all that basically means. This candle here, yet again, the bulls have tried to push gold up and the bears took over, brought gold down. So the person I was talking to was still convincing themselves that gold was actually going to come down. And you can see from these candles, it actually increased instead. Now, this candle here, you can see that gold, the price would have pushed up to here, then it was rejected again. And that's an indication that gold could start to come down. And this candle here is kind of a dojo, and all a dojo means is uncertainty in the market. You can see that gold increased, then it decreased, and it just was in a nowhere land. It was like they didn't know, the market didn't know whether to push gold up, bring gold down. So then the next candle, gold actually did go up. And then another kind of dojo with a red candle, which just means that the bears were kind of taking over control now. There was 3-4 attempts for gold to go up, and it didn't. So what happened? Gold began to go down. So the person I was talking to did not take the profit. So they had placed this second position on the candle, placed one position here, second position here. And the second position, gold began to come down further. So yeah, again, they had a chance. They could have closed, and they didn't. And then there was another bit of a fight going on. Now, just to cut a long story short, let's just look at the daily chart where each candle represents a day. And this is the candle they bought 2 positions that day. And you can see what happened is gold started going up in value, and it continued going up in value. So asking the person yesterday, well, why didn't you not close it? Because what happened is this 42 cents per pip, you can imagine this was building what you call a negative value. So this person's account was carrying a negative value the more price continues rising. I apologize for the cockroaches there. And what they said to me, they said I didn't want to lose any money. And I was still convinced gold was going to go down, so I didn't want to lose any money. So what I wanted to do, I wanted to just hold on until the price came back down again. And lo and behold, what happened on Monday? Gold shot up. It was rejected. It tried to go up again. And then it shot right up. Now this price would have been a blue candle. Forget about the red initially. It would have been a blue candle. Then it was rejected. But the money was lost. The money was lost while gold was climbing on this candle. So that would have been a blue candle. So basically our account was wiped out. Why was our account wiped out? She was buying here. Price rose up to here, which is like 1,271. So that's over $500 US. If you calculate 0.42 cents, it's over $500 US. So that's why her $450 US was wiped out. It got wiped out while gold was increasing. And look what's happened. This is why I said it's a little bit sad that this person has lost their savings, because the price has come all the way back down again. And they had a feeling, obviously, they weren't expecting price to jump up as high, and would price actually come back down, but there was no need to lose the whole 450. Maybe had a loss of 100 or 200 or something like that, but to lose 450 is very, very sad, especially when gold is coming back down. So I'm drawing this chapter to an end. What I'm going to do next is the next chapter is going to be, I'm going to do 2 parts. One is actually going to be for those who are watching my videos for the first time and who are not part of the code to trade. And you will get used to cockroaches until we move. Then I'm going to do another video for those who are part of the code to trade and understand what I'm talking about. And there'll be a lot more actual charts for them. So I'm drawing this to a close. Thank you for watching this chapter, and I'll catch you in chapter 3.